Hello, everybody, and a very warm welcome back to another live Taurex trading stream today. I hope everyone is doing well on this Wednesday morning and is ready for another interesting day in the markets. We're actually going to take a little bit of a break from Donald Trump, to be honest, because he really has been causing all of the market moves. But we have some more pressing news that's been coming out over the last 24 hours or so, which I want to talk about. And I'm really hoping that today I can actually see some direction in these markets, and hopefully I can get a good trade on as well. That's really what I'm looking for. If you are around and do have any questions on the markets at all, feel free to pop up and ask them in the chat or on the Discord channel, wherever you'd like to put those questions, and I'll be more than happy to answer them for you. Bobby, it's good to see that you're on time today. Normally you're watching it on catch up, I know, but it's good to see you, and I hope you're doing well. Let me know what markets you're trading as well in the comment section, and if there's any markets you want me to analyze as well, then now is a great time to do it. So before we start, I just want to point everyone in the direction of our fantastic new prop firm, Atmos by Taurex. It's a broker-backed prop firm, and if those of you who are familiar with the prop space, I know some of you have messaged me privately and are interested in this. Broker-backed is going to be it's going to be the thing over the next few years. There's been big regulation issues with the prop space. We've seen prop firms close down. I was actually trading with a prop firm myself. You probably remember my Forex funds, and they shut down as well. Being broker-backed is going to be huge for regulation going forward, and we're going to want, obviously, if you have a prop account, you're going to want it to make sure that it stays a prop account. So that's why we launched Atmos by Taurex. The website is now live. You can see it here as well. You'll see my face on there. But if you want to check that out, we do have a Discord channel dedicated especially for Atmos. So you can join both. I recommend you be in both, but we are going to be doing content, or I'm going to be doing content for both of them, Taurex and Atmos, and it's going to be sort of a dual branding approach. So feel free to check it out if you want to get started. And there's some really exciting competitions going on at the moment and some free giveaways on the social media channels as well. Okay, right. Wanted to quickly speak about Google stock. I don't know if anyone saw last night. We've had some big tech earnings come out in the form of Google earnings, so their quarterly earnings report. And as you can see, really it wasn't really the best earnings report I've ever seen. It was slightly weaker actually than what we was expecting, and it's sort of thrown me off because I was really shaping up for today to be a day where I maybe buy the Nasdaq. But I'm just going to second guess myself a little bit. But I'm going to go on the chart and go have a look at the technicals. But here's what happened with Google stock last night. So basically, they released it after the bell on Tuesday, and their fourth quarter earnings report revealed slightly weaker quarterly revenues than Wall Street expected, and much higher spending in 2025 than expected as well. So making less money, spending more money means less profit. So the stock actually declined 6% to below $195 in the afternoon. The dive came after Alphabet reported mixed Q4 earnings, 2.15 adjusted earnings per share, which exceeded the estimate of 2.12. So slight beat on the earnings per share, but its 96.5 billion in revenue fell short of the 96.7. I mean, it's weaker, yes, but did it warrant a 6%, 7% fall? I'm not too sure. But there's so much expectation now for these big tech firms to smash their earnings reports every single time. If it's slightly in line or slightly lower, then there tends to be a little bit of a knee-jerk reaction. Let me just quickly get the stock up on now. Here we go. Right. This is basically the reaction of it. Look at that. 4-hour candle. So we were at 206, but the pre-market is telling us we're going to be opening up at 190. What does this represent for me? Well, as you can see, I think there's a potential chance that we've actually got this range here. Let me just tag this range there, and also in here. Okay, so there's our range, and you can see that we've taken the buy side liquidity of that range. I'm wondering if we see some weakness today, and we go down and trade into 184, then we could see a little bit of a bounce, and that's something that I would look for in Google stock. But the actual reaction from the Nasdaq's perspective, we're down 0.4% on the day, but it wasn't. It's not crazy. Okay, so I thought that maybe this would feed into some, proper risk-off sentiment on the Nasdaq, but it hasn't really been the case. So when I look at the Nasdaq today, you can see, and let me just delete some of these and just tidy up my charts. Okay. We're sort of seeing this consolidation pattern and this range between 2,500 and 22,000, and we're sort of trading at 21.4 now. So what's interesting is this is the fair value gap. This square here, as we say, is the fair value gap that was created between Friday's close and Monday's open. The market came up, filled that gap, tested the 50%, then started going higher. Now, when we zoom in on this is a good support area for me. I'm wondering if there's a lower time frame OB as well. Not quite. Oh, okay. So we've got equal highs here as well. So that's a good liquidity target, 21.6. And I'm just wondering whether we could see this pretty much this area in right now as support. So what I'd wait for, guys, is, let me delete this. I want to see where this out. What we on? So this next hourly candle, it's 11 a.m. for me. What I want to see is I want to see it close above this 50%. If it closes above this, if this candle closes above this 50%, I'd look for that move higher. And I'd target these equal highs. And then what I would probably do is I'd buy the market. Let's say it closed above the 50%. I'd probably put my stop loss below the wick, and I'll try and target these equal highs for a 7 or 8 to 1 risk reward. That's probably the way that I'd play it today. So there's obviously, it's 8 minutes past the hour, so give it 50 minutes, wait for this hourly candle to close, and let's see if we can get a close above this 50% and then look for that move higher. Okay? Right. The other markets that I wanted to look at today. Euro dollar. Remember those fair value gaps that were created on the dollar basically over the weekend? You saw it in pound, euro, Swiss franc, yen. They've all been filled. So well done if you managed to, get in on any of the counter trend trades to fill that gap. I'm now looking at euro dollar and I'm thinking, right. I apologise, I'm on a small screen. Trying to see if there's a good area that we can look to potentially sell from, because I'm still bullish on the dollar. Like, even though Trump may have gone back on his word with the tariffs, I think overall what we're seeing right now is strong US growth, strong US inflation, potentially a strong NFP on Friday if that comes in, and a Trump which is threatening tariffs and also implementing tariffs. So I still think that feeds into overall dollar strength. I'm just trying to see if I can get a good pair. What about the yen? Let's have a look at the yen. So what I've done here on the Japanese yen is I've basically drawn a Fibonacci from the bottom here to the top. And here sits that 61.8% down at 152.6. Okay? Is there anything there that can give us an idea of an area to trade? Well, there is actually. we've got a demand zone at that 61.8%. And here is my trade for the day. Finally, I found it. $7.5 to 1 risk reward. I've used a daily Fibonacci, and I've used a 4-hour demand zone that sits on the 61.8% of that daily. Pretty good confluence, right? I'm pretty happy with that. Now let's think about it fundamentally. So we know the dollar side. What's happening with the Japanese yen? Well, we're seeing stronger wage growth in Japan, which is feeding into inflation and is feeding into this narrative that the Bank of Japan are going to continue to increase interest rates. That's why we're seeing dollar yen lower. However, I've been down this road before, and generally speaking, the Bank of Japan are an accommodative central bank, which basically means they prefer to flood the economy with money rather than take money away. And that flooding of that currency weakens it in theory. And therefore, it's always a bit short-lived when we see Japanese yen strength, even when they do things like intervene in the market. It's always short-lived. So I don't mind being on the long side of dollar yen still. And what I'm looking for, you got to remember, is if this does fall all the way down here, we're sort of probably in oversold territory. And even if we just got, even if we just got a bit of a bounce, okay? Even if we just got a little bit of a bounce from there, we could still get our 1 or 2 to 1 risk reward, and we can move our stop loss to entry. So that's probably the way that I want to trade. So what I'm going to do is I'm going to post this trade idea in the Discord channel, in the trade ideas section. So it'll be the analysis from the stream. So if you do tune into the streams, you are getting sort of the lowdown on exactly how I'm looking to trade these markets. And sorry, just before I go, sometimes when you look at markets that are trending, look how many candles it takes for it to go from one place to another compared to the downside or the upside. So what I mean is, if you counted from the bottom here to the top here, how many candles that took to make that bullish run, it's probably the same amount of candles it's taken to get to the 50% as in the retracement, which basically means we're seeing more volume in buying than we are in selling. And this is a typical low volume pullback. And what I'd look for is that for our next wave higher. So I like the technicals. Fundamentals are okay. And that becomes my probably my first trade of February, which I haven't actually placed one yet. Okay, right. I believe that's roughly about it. I did want to as well just mention, if you did hold on to my gold buy from 2681, you'd currently be trading at a 16 to 1 risk reward. So if you put 1% on that and you never closed it off, is theoretically, hypothetically, sorry, you would have made 16% profit by now. So I actually bought at 2685, and now at 2856, which is incredible. However, I did close the trade out here. I am still bullish on gold. My price prediction for 2025 is 3,000. So what I'm looking for is the next pullback, as always. And when we do get that next pullback, I'll be looking to ride it higher. Really simple. Just following the trend and following the momentum. So I probably will delete most of this analysis now. And once I'm on a bigger screen, it'll be a bit clearer. But yeah, such a lovely breakout on the higher time frames. So let's wait for that pullback, and then we can look to try and buy gold prices as well. Okay, right. I think that pretty much sums it up for today. Let me just quickly go onto the economic calendar. Oh yes, I'll have a look at those, Bobby. I'll tell you what, I'll look at them now. WTI. Oh, I've just taken one off my... Sorry, 2 seconds. Indices. Red list. Sometimes when you hover over that button there, it gets rid of it. And I don't want that. Bobby, right. Let's have a look at oil prices. Did we ever fill that FVG? We never even touched it. Okay, well that becomes a target, doesn't it? This gap here becomes a target if we look to buy oil. That becomes a target. Is there any evidence? Is there any support area or anything that we can look at? I mean, we have pretty much just broken down below this low, which is a bearish shift actually. Higher time frame, Again, broken below the 61.8% of that Fibonacci move. If I'm being honest, Bobby, this looks quite bearish. This looks like a situation where we may even come down and take this low out, and maybe even get a trade below 70. That is quite a bearish shift. This is a good area. I'm not personally going to trade this, Bobby, but this is a good order block or supply zone. And again, targeting 70 from there would be a 3-to-1 risk reward. Not bad. Just to target that 70, something that looks like that, Bobby. We have had a shift of the structure there on the higher time frames. But if that structure does shift bullish again, then I'll be looking for that fair value gap that was created. That's always for me going to be a key area to target. Okay. Our good old friend, the pound versus the Japanese yen, right? Yeah, it's a difficult one. I still would say that if... Do you remember this, Bobby? Do you remember this trade? It was a RSI divergence into an order block. And a liquidity grab there. RSI divergence, move higher. Wouldn't have quite been stopped out. Let's have a look. Just isn't anything clear cut. I mean, my initial thoughts here is that we've had the reaction from that higher time frame demand zone. You can see that reaction. We shifted bullish, right? And then we've sort of retraced back down. I'm wondering whether we might start to see this, another run up higher. Again, it does depend on what the bank... I'm not particularly bullish on either of these currencies, to be honest with you. If I had to stick my neck on the line, Bobby, I'd say that, because we've got this higher time frame support and this RSI divergence and the liquidity grab before, I favour longs rather than shorts. However, I think I prefer it with the US dollar rather than the pound. Okay. Right. Good stuff. Okay, everybody. I will end the stream there. And just to summarise, we have had Google earnings which are slightly weaker, but I still do fancy some Nasdaq longs because it was quite unmoved. I remain bullish on the dollar, to be honest. And if we do manage to get that dollar yen trade tagged in, that will be my first trade, personal trade of February. So I'll update the journal if that trade tags in. I'll also post that trade in the Discord channel. We're going to be changing the look, so you'll be able to scan a QR code to join the Discord channel, but for now it is in the description. We're just working on all the creatives in the background to make sure that it's easy for everyone to just scan on their phone and come and join for free. Check out Atmos if you can. We've just launched there as well, and I'll be doing the content for them. And if anyone does have any further questions, as always, feel free to reach out to me in any of those channels, and I'll be more than happy to help throughout the day. Trade well, trade safe, and yeah, I'll see you all very shortly. Thank you.